Hello, everyone. My name is Taylor Rodier. I am the Legislative Affairs Manager at Drake Software. I have been in this role since 2022, and I have been tracking the One Big Beautiful Bill that was signed into law on July 4th since basically right after the election results were finalized and Republicans announced their intention to pass a large package of their domestic policy agenda via the reconciliation process. So I have seen the bill in all of its iterations so far. I've become intimately familiar with the political dynamics that shaped it, and now I have begun to look ahead at the issues that the legislation will face moving forward, particularly in terms of implementation and administration, and that's what I'm here to share with you all today. There are key tax code changes coming for filing season 2025 that were passed as part of the One Big Beautiful Bill Act. They include retroactive provisions that taxpayers will be able to file in 2025. So we are going to go over a few of those. This won't be a comprehensive review of them, but it will be a review of some of the new ones that have generated a lot of news. So top changes, again, we have retroactive provisions back to January 1, 2025. We have many individual provisions of the Tax Cuts and Jobs Act made permanent, and that includes the increased standard deduction. And then our big three that we're going to talk about today are the tip and overtime income deductions, as well as the vehicle loan deduction. So for the tip, overtime, and vehicle loan deductions, there are a few overarching rules that we can talk about for all three of those. They're all effective for 2025 to 2028. And if you want to be able to time that out for your clients, that you can go ahead and let them know that those deductions will be available for the length of President Trump's term. That's how the laws were written. So they will be available for the amount of time that Trump is in office. They are available for both itemizing and non-itemizing taxpayers, meaning taxpayers can take advantage of the new deductions in addition to the higher standard deduction if they choose. These deductions, the tips and overtime deductions, require taxpayers to include their Social Security number on the return, and they require taxpayers to file jointly if married to claim them. They require employers and other payers or lenders to file information returns with the IRS and furnish statements to taxpayers showing the total amount of qualified tips, overtime compensation, or interest collected. And all of these provisions include phase outs based on modified AGI. Another important point for tax year 2025 is that the IRS will provide transition relief for taxpayers claiming the new deductions and employers, payers, or lenders that are subject to new reporting requirements. So let's dial into the tip income deduction. For 2025 to 2028, employees and self-employed individuals may deduct qualified tips received in occupations that are listed by the IRS as customarily and regularly receiving tips. These tips are to be reported on Form W-2, 1099, or other specified statement furnished to the individual or reported directly by the individual on Form 4137. Qualified tips include voluntary cash or charge tips received from customers or through tip sharing, and the maximum annual deduction is $25,000. You can be on the lookout for the IRS to publish a list of occupations that are customarily and regularly tipped by October 2nd, 2025. There are a couple implications of this deduction. Employers may need to adjust their reporting systems, and service industry clients may need to be educated on record-keeping changes related to this deduction. Next, we'll talk about no tax on overtime compensation. So individuals who receive qualified overtime compensation may deduct the pay that exceeds their regular rate of pay. So that would be the half portion of time and a half. The overtime compensation is to be reported on W-2, 1099, or other specified statement. The maximum annual deduction is $12,500 for single filers and $25,000 for joint filers. This again is available to itemizing and non-itemizing taxpayers, and employers and payers are required to file information returns showing the amount of qualified overtime compensation paid during the tax year. One tip we have for tax professionals related to this deduction is to prepare clients for the reality that they may only deduct the pay that exceeds their regular rate of pay, which isn't super clear when you hear in the news, no tax on overtime. So clients will need to be prepared that they can only deduct that half in time and a half, not the total overtime compensation. This will complicate calculations a bit and may result, again, in a smaller total deduction than what clients were expecting. And again, it's a good idea to prepare updated forms and documentation checklists for your clients in regards to this deduction. And next, we'll talk about the vehicle loan deduction. So this is for individuals to deduct interest paid on a loan to purchase a qualified vehicle, provided the vehicle is purchased for personal use and meets other eligibility criteria. Lease payments do not qualify for this one. The maximum annual deduction is $10,000. And the loans had to originate after December 31st, 2024. Qualified vehicles for this deduction include cars, minivans, vans, SUVs, pickup trucks, or motorcycles that underwent final assembly in the U.S. And taxpayers have to include the VIN of the vehicle on the tax return for any year in which the deduction is claimed. So a couple tips related to this deduction: stay informed on eligibility criteria, and perhaps think about preparing templates or guides for clients planning vehicle purchases or considering a refinance of a vehicle loan to take advantage of this deduction. So there's one other dynamic at play with implementing the One Big Beautiful Bill. And we want to make you aware of this as tax professionals because we expect to see at least a few complications in preparation for tax season or filing season 2025. So we have seen a 25.9% reduction in IRS workforce since January 2025. A lot of this reduction in force has come from taxpayer services and the small business self-employed division. Those accounted for more than 2/3 of all of the cuts. And then in early July, we had the Supreme Court rule that reductions in force across the federal government can continue after they had been blocked by a district court judge. So we do expect to see more cuts at IRS. And we've also seen the IRS budget request for fiscal 26 that proposes nearly a 60% cut to IRS technology and a 40% cut in overall spending. So we've seen the IRS lose a ton of employees, and we are going to see them try to implement a huge tax policy bill with a significantly smaller team and smaller financial resources. That means that we could see delayed guidance on internal revenue code changes. We could see increased processing delays during tax season, longer hold times, and slower turnaround for forms and notices. And it's going to be important to plan ahead and manage client expectations early. As you're having conversations with clients in preparation for a filing season, it's a good idea to let them know that interfacing with the IRS in the coming filing season may be a little bit different than it has been in filing seasons past. Tax pros, in preparing for helping tax administration through this filing season, need to stay ahead to stay compliant and properly serve clients. In addition to watching content like this and reading the Drake blog, make sure you're regularly checking irs.gov for press releases and updates, and consider attending one of the IRS forums this summer where you can hear directly from IRS employees who are going to be helping to implement and administer the One Big Beautiful Bill Act. And then also make sure you register for a Drake Update School this year. Registration is officially open for update schools. And you can also visit, again, Taxing Subjects, the Drake Software blog for in-depth articles and to download the 2025 guide to tax law changes. I want to thank you all again for joining me today. I hope this was helpful. Feel free to send your feedback or questions, and thanks again.